Hey, let's circle back on AMD. Last time we looked at them was July 30th. So between now and then, they reported earnings. So we'll look at just what we expected to see from this quarter, what they actually did, and look into what they're projecting for next quarter, potentially the year ahead, but definitely next quarter. We'll also touch on news, not much in that time, but there was one thing worth mentioning. And then we'll pivot into the technical analysis. So the last time we looked at this, it was trading at 112. Now it's at 104. We thought it was a good buy point at 112. So we'll look into, is 104 also a good buy point? And if it's not, what is a good buy point? All I would imagine for that is if it broke its uptrend, that would be the potential concern there. Here we have what we expected to see. So 5.3 billion in revenue and 57 cents per share. What did analysts say? Yes, analysts were also saying that. I more so pulled this one out to show the surprise percentage. For AMD, they're very good at picking them. So what we see here, again, but this was late in the quarter, so I know they kind of tweak this from time to time, but this is what they had in the final, and that's pretty much what we got. We got 5.34 for revenue, and earnings came in at 58, so it beat just by a little bit. Earnings for the full year, I guess we'll look at that towards the end. Moving on to the income statement, a couple things pointing out here are the net revenue. So when looking at this 6 months compared to last 6 months, we're seeing a drop down here in the bottom right corner. Year over year, it's about 18%. We were expecting that. 2022 was kind of record-breaking year in many segments. So to see a pullback, they fully told us that. So that's not bad. What they also told us is the second half of this year is meant to pick up. So currently seeing it at 5.3. They're guiding us for 5.7. Again, we'll look at the guidance in full detail a little later, but for right now, 5.3. It does seem like it's flattening. If we look at last quarter, it was also at 5.3. And then the fact that they're projecting upwards to 5.7 all seems good. It possibly it's not increasing as quickly as maybe investors or analysts were expecting, but the turnaround does seem to be happening. Of course, not until we see the result can we kind of prove that. But again, AMD has a very good track record of meeting their expectations. Moving on to gross profit. So again, this I feel like they clearly have like a break-even point for their different segments, and we'll look at that in a minute here. But with the gross margins, comparing this 6 months to last 6 months, a little bit of a dip, going from 47 to 45. 45 is still good though. That's why we like this company. That's why we're sticking with them. And then quarter over quarter, we're seeing it actually tick up. Last quarter it was at 44, now being at 46. Again, I think that's just a sign that it's starting to go back to where it was before, and hopefully just continue on to new highs in terms of revenue. But again, we'll see how this goes. Research and development, that was really the only expense that I saw tick up in a noticeable way, and even it really isn't that much of a jump. Quarter over quarter, nothing changed. But whenever you look at last year, it is elevated a little bit. The first 6 months of this year, adding another 500 million to research and development compared to last year. Overall, not a big tick, but it was enough to point it out. Then here at the bottom, we kind of touched on it. The revenue year over year is going down, but quarter over quarter is flat. Again, they're saying this is the bottom. We now want to see that start to rise. Year over year is probably still going to be down, hopefully at a lesser degree. And quarter over quarter, hopefully we see that start to go up. And then operating expense, that kind of caught my attention that year over year, when they had their best year, arguably last year, the expenses this year, this quarter where revenue's down, they actually improved their operating expenses. So that was nice to see. And also the quarter over quarter, we're seeing that pull back. So even though I mentioned that R&D's a noticeable step up in expense, when we look at the whole operating expense, overall, it's kind of played out to where it's flat or actually going down slightly. So that's nice to see, sort of a silver lining. What do we have here next? A different way to look at the revenue. So one of the reasons we also liked AMD is because they're pretty diversified. So they have this data center revenue, which is supposed to be one of their big winners. We have client revenue, gaming revenue, and embedded revenue. And then we have this all others, but those are the main four. And so as we look at the numbers, so for this quarter that just happened, we have 1.3 billion in data center, roughly 1 billion in client, 1.5, almost 1.6 in gaming, and then 1.4 to 1.5 in embedded. So very split. Clearly client's a little bit lagging, but everything else is right in that 1.3 to 1.6 range. So 4 lines that all are pretty much billion-dollar revenue generators. The big things that I noticed with this one is compared to last year, data center revenue is it's relatively flat, and that was supposed to be one of their big winners. So to see it kind of flat, actually going down, kind of surprising. I guess the only reason I say that is because we knew the client revenue was going to be a big drop off, and it really was, going from 4.2 billion in a 6-month span to now 1.7. Quarter over quarter, though, we are seeing it take a step up, going from 700 million to nearly a billion again. So that's a positive sign. But again, the year over year big drop there. Data center, thought it would be faster by now, but it does seem to be turning around. Quarter over quarter, still relatively flat, but a slight improvement. Gaming, relatively flat year over year, slightly down. This quarter specifically, though, kind of noticeable. Roughly 200 million in net revenue down. And then the big surprise for me is embedded. That one grew rapidly, almost doubling. And embedded, that's kind of getting the help from Linux. If we remember, that was a company that they bought probably close to a year ago, maybe a year, 2 years ago at this point. That really gave this a boost. So it's nice to see that kind of playing out as intended. But yeah, that's gone up tremendously, like almost 50% compared to last year. And also the operating income from that segment is so good. Like it's over 50%. When you see the other ones, like the client revenue, there clearly was a break even point. And I think what happened there is they had to, what's the proper way? They had to increase their goods sold because they had to write off inventory essentially. And so I think that had to impact that because it should not be negative at this point. So I'm imagining that's what it is. We can look into it, but we'll just see it play out. And then, yeah, net revenue overall down. We kind of touched on that before. Here we just have a nice little picture. A couple pictures here. So revenue, we can see that big incline. They kind of started warning us about how it's going to turn down. And now it's been kind of flat for a full year. Again, they're projecting 5.7, so that would kind of start bringing it back up. We'll see. Gross margin, another thing that, to me, it's kind of showing a turnaround, or they just got smarter about it. It reached 50%, pulled back down to 48, 46, 42, and we're already seeing the turnaround going up to 46 right now. Hopefully that stays flat. I think they guide us for a little bit more, maybe like 50%, but that might be non-GAAP. We'll look into that. Balance sheet, just a couple things that popped here. Of course, we look at the current assets, 16.5 billion, current liabilities, 7.5. Very solid there. Cash alone, 3.8 billion. You add the short-term investments, that pretty much covers all your current liabilities. But cash did go down about $1 billion, but short-term investments went up, so maybe they just bought some short-term investments. Inventories went up slightly, but I believe they're ramping up for a new product, which I believe we touch on in guidance, so that's kind of expected. Current portion of long-term debt and just long-term debt, that's new. It was new last, I guess, December, and now at this time, they now are starting to pay it. I want to believe that's part of this Linux deal. Next, the statement of cash flows. A handful of things here. So we see net income, that going way down compared to last year. AR, that pulling back. Inventory, actually, they spent a lot more on that, but they do have a new product line. We'll touch on that in guidance. Payables, that pulled back, and that's to related parties. It looks like accounts payable, just general, they actually saw an increase there. Overall cash provided by operating activities, overall decrease, whether you look at the full year or the quarter, it kind of matches up. Yeah, not a very big improvement. Kind of went down pretty far. In terms of investing, we have a handful of things. So purchases in short-term investments, they spent a lot of money on that. We touched on that in the balance sheet. Proceeds from maturity of short-term investments, they received a lot of money from that, but not as much compared to last year, but still a lot of money there in the positive direction. A couple acquisitions. So I guess this Linux deal, they ended up receiving money from that. I'm not sure how that exactly worked, seeing as they bought Linux, but apparently they received a lot of money from that. And then when they bought Pensando, that obviously cost a lot of money. That did not happen this year. Those were just one-time occurrences. And so, yeah, I guess that kind of makes sense where that extra money came from, to go from the cash to the short-term investments. Overall, the cash investments, that went down a lot. Again, they don't have this Linux deal or this proceeds from short-term investments, so I don't know. That must have just been a timing thing in terms of the short-term investment and maturity of short-term investments. I believe they're involving themselves a lot with no, I don't think they are. Never mind. Cash provided from financing activities. Proceeds from debt. So nothing there. Repurchases of common stock. So surprisingly, whenever they were growing very rapidly, they were buying a ton of this stock, $2.8 billion worth. But now when it's actually declining, they're not buying as much. Very interesting. Still buying, hundreds of millions of dollars here, but definitely a drop off there. And so, of course, we're seeing a drop off in cash in financing, which is good. I mean, they need to kind of save that money for other areas. Next, okay, so the guidance. So we kind of hinted at a couple of these things, but this adds the full picture. So for the third quarter, they're projecting $5.7 billion, which is a step up from the 5.3, and then gross margins of 51%. This is non-GAAP though, because we've been referring to 46%. That's GAAP. I believe their non-GAAP was 50%. So to see 51, that's a slight improvement. We'll see how it actually affects the GAAP. That 46. I would expect it to be flat, if anything. Maybe a little tick up, but probably going to see another 46%. A comment that was made by their treasurer here. She says, looking to the third quarter, we expect our data center and client segment revenues to each grow by double-digit percentages sequentially. Um, those are two very good segments. Let's just go back for a little bit. So data center here at 1.3 and embedded at 1.4. That's nearly half of their revenue. And she's saying it's going to go up by double digits, so 10%. So like 130 and maybe 140. So like 250. So that's not bad. So basically, okay. And they also, I don't know if she mentions it, but the other two segments, yeah, okay, so those two go up by double digits potentially. So I think that's where the extra zero point 0.3 to zero point 0.4 billion comes from. And this is due to the EPYC and Ryzen processors. And this is meant to offset gaming and embedded segments. Oh, I picked the wrong one. Okay, so it's this. They're thinking these two are going to gain about, say, 10%, which is decent, I guess. You know, that's whatever, 0.2 to 0.3 billion dollars. And hopefully these don't drop too much. Okay, it kind of seems like a decent stretch, but we will see. Again, they normally come within range, so I do expect to see this. But in terms of this quarter, again, 5.7 billion, gross margins of 51%, operating expenses at 1.6 billion. This number was surprising to me because whenever we go back to their income statement, this is like 2.4 billion. Why are they mentioning 1.6? Like nothing here. I don't know what she's looking at specifically. I have to imagine it's definitely the R&D and maybe a portion of marketing, or maybe it's marketing plus the research. Like I don't know where she pulled the 1.6, but if they go from like a 2.4 to 1.6, which I don't think that's going to happen, but if that were to happen, I mean, that'd be such an incredible cost cut. So yeah, I'm not putting too much weight behind that. In terms of the full year, again, they kind of gave us some guidance here saying the data center and the embedded segments are expected to grow year over year. The others are flat. And so I think that's where I got mixed up before. So data center and client, they think is double digit this quarter. But I guess year over year, embedded and data center are their winners, which makes sense. Client is probably going to be a big negative percentage year over year. Gross margin, they're saying expansion in the second half. So when they say expansion, they mean gross margin is going to get bigger, right? Modest increase in operating expenses. I don't know what modest is, but I guess we would just say 10%. So looking back, yeah, I mean, if these went up 10%, yeah, that's going to pull down to the bottom line. But if revenue can go up, well, revenue's not going to go up 10%. We'll just have to see. Hopefully it's not crazy. But yeah, it'd be like 1.6. We'll just see. We'll see what that means. So looking ahead, here's what the analysts are saying. Pretty much the same, 68 cents. I guess they don't project that. But the 5.69 billion, that's pretty much what they said, 5.7. But this pulled back. So I left a little note here. So Q3 revised down its earnings per share and revenue. So I think that's why we might be seeing a pullback from the results here, is because that 5.7, if we skip all the way back to the beginning, they originally were saying 0.73 and 5.8. So now they're saying 0.58 5.8 and 5.7. So that got pulled down, and also the annual stuff, so 2.85, and we'll just say 23 billion there. Skipping back up, got pulled back just a little bit, and also a little bit. Currently, the revenue seems kind of like a stretch. Earnings per share seems reasonable. I wouldn't be surprised if that got revised down a little bit more, but we'll see what they do in this quarter and then next quarter, and that'll give us the answer. But that sums up the guidance here. The only news that I saw is, and we kind of mentioned this, is AMD's plans for an AI chip to debut at year end. And this is their flagship MI300, this AI chip in the fourth quarter. It's designed to compete against the advanced H100 chips by NVIDIA. MI300s exceed performance limits for the sale to China. And unlike NVIDIA and Intel, AMD has yet to create special chips for the lucrative Chinese market. NVIDIA modified its H100 chips to comply with U.S. Department restrictions for the sales to China. AMD is mulling a similar strategy with the MI300 and older MI250 chips. So yeah, they're probably going to modify one of those, either the MI250, bring it up to the max, or the MI300, bring it down to the limit, and whichever is most cost effective. Kind of makes sense there. They will likely see strong demand because of plenty of people cannot get their hands on the NVIDIA chips. AMD has enough components for MI300 chips for an aggressive launch in the fourth quarter, and there's still strong interest in its older MI250 chip. So we'll see how it picks up. Fourth quarter is their shining star moment. So we'll see what they project. Again, looking back at the full year, they don't really give us, they just say data center and embedded segments expect to grow year over year. That could just be 1%. I think, again, 22 was a very strong year for them. So if that does grow year over year, that's definitely a good thing to see two of their main segments grow year over year. But we'll continue to watch this. Let's just shift now into the technical analysis, and we'll just see if now's a good price for this. So again, last time we looked at this was on July 30th. So July 30th down here was at, it looks like we said 112. So we probably checked in not the end of the week, but very close. 7:30, and it was like 112. Oh, okay, we did check at pretty much the end of the week here at 112. Since then, pretty much traded sideways. Definitely pulled back though. If we pull out a little bit, we're seeing that we had this uptrend. That's one of the notes. In an uptrend since November of last year, and to buy the dips. We're still in that. It's at the very bottom now, so there's definitely worry that it could break down to a lower point. If it did do that, the points that I'd be looking at is potentially here, this red line at roughly $100. I'm going to make that a blue line, only because there's some support and some resistance there. Going back to 21, before it like launched itself to record highs, it got some support there. Even on the way down, it kind of hesitated there. It pulled back to that mark, but rallied back up. Well, here we are again. It might act the same way. So right around 100, there's some support there, but there's also some resistance in the more recent past. There's been some resistance there. So if we were to continue on and say break that $100 mark, the next point of interest would be like 84. But you know, we'll just judge it by where it is right now. So right now it's at the bottom of the uptrend. That's like the ideal spot. We also noticed some support at 111. So it looks like, let's just start updating this. So it's currently at 104. Buy points I had were 109 and 111. I think I messed up the 109 because back then it should have been 101. So I think that's what I meant to put, 101 from 109. Looking at right now, it would be 104. 104 would be the bottom of that trend line. And since we're midweek, I'm probably going to pick this one up right away. We also bought this one last time at whatever it was, 112 or 111. But just to continue updating this, so 104 is the buy points that I'm most looking at now. We'll keep in the 111 because that did act as some support, but it's just not the point of interest anymore. The next buy points for this one would potentially be 99. We can put that on here. I'm hoping to circle back on this in about like 2 weeks. So we'll see how it acts. If it continues downwards towards 100, I think just mentally it'll kind of hover there. But it could just continue its uptrend. It hasn't technically broken it yet, so we will definitely see. Resistance, we have 120 and 125. So 120 is the red line. Going back to the past, that whenever it started breaking its uptrend and tried to get above 120, just it couldn't get above that point. Even more recently, even though it's kind of found support at 111, it also was kind of finding some resistance at 120 again. It definitely broke above, it reached 130 roughly, but only for a week. It reached that point, fell down within that same week, popped back above, fell right back below it, and hasn't been able to get above it since. So 120 is definitely a point of interest. And then 125, I believe that was the top of the uptrend, but maybe we forecasted ahead a little bit, because otherwise right now resistance would be 121. If we fast forward roughly like 2 weeks, that'd be about 123. So I'm going to update the 125 to 123. And then the 104, just to do the same thing so it matches, it'd be like 106. 104 would be specific to today, but 106 would be like looking ahead. So we're still at that point. The dates, we can change that to today. Earnings, we went through that, so I can fast forward that. And then our note. In an uptrend since November of 22 by the dips. Yeah, as far as I can tell, that's really all that's happening. We're in this dip again, and the uptrends should continue on. There's not much, I guess, there's not that much resistance at 120, but yeah, it's enough to make it dark red for now. I don't think it'll, I guess we'll see over the next couple weeks, but I don't imagine 120 holding this one up. It really will depend on what they do next quarter. Next quarter's November. That's right around when a decision needs to be made. So it could continue this uptrend, and if they do bad on their quarter earnings, yeah, this could easily drop to like 99, 84. I could see that. Or if they meet, it could just continue right in where it is, 100 and 120, potentially go up depending on guidance. But yeah, I think it might just start trading sideways, 99 to 120. That kind of makes sense right now. So yeah, overall, I do like this point. So just a quick recap to close out. We have AMD here. Let me unhighlight this. So purple would mean I bought it near that date. Since we just updated this, we'll likely pick this up soon. But AMD currently is at 104. Buy points I have marked are 99, 106, and 111. Again, that 106 is the bottom of the uptrend, where this week specifically it's 104, so it's like the perfect spot. Looking ahead, the bottom of the uptrend would be 106, so just some backup for there. Resistance, some resistance at 120. 123 is the top of the uptrend, again forecasting out a couple weeks, but 120, there seems to be some resistance there. Very interested to see how it responds over the next couple weeks. But overall, it's in an uptrend. It's been that way since November. Buy the dips. This is currently a dip situation, so I intend to pick some up of this. But that wraps this up. So if you have any questions or want to leave any comments, feel free to do so. I'll do my best to answer those and respond. But otherwise, please like, subscribe, and I'll see you on the next one. Bye.